Vanguard has just reduced their NIO holdings by about 90% from its international growth fund, and I know the news is a couple days old now, but I just wanted to sit on it for a little bit and try to figure out why, because honestly, as far as I can tell, NIO's delivery growth potential seems solid, and they've been slowly making their way towards profitability with each quarter, and it seems odd to me that Vanguard has decided that this is the time to sell NIO when it's at its lowest, after they've just invested a ton of money into infrastructure and their brands. And now that they have 2 sub-brands coming out, their deliveries are picking up on the monthly basis. And now that China's prime loan rate is the lowest it's ever been, at least in the past 10 years, and the outlook is that they're going to hold those low rates once the yuan starts to stabilize. And what's interesting is we're seeing smaller funds adding to their NIO positions at this time, and analysts on average are pretty bullish about the stock. And, Vanguard for the past couple of years has not so quietly been struggling with the Chinese market. We know that. I guess they've decided to just exit the country altogether recently. And after diving a little deeper, I've found one of the PDF reports that they released called Megatrends, the Deglobalization Myths. They hint at something they call slowbalization, where they see global trade likely to slow. And it says their projections globally, they see things slowing down, but they're predicting that the US and Europe are likely to be unaffected because something about, companies' trade profiles. Anyways, that's their mantra. They see the US and Europe being protected mostly, while a lot of other companies that depend on trade, like Brazil, China, Australia, are likely to be hit the hardest by globalization. And so that's possibly, why we're seeing them divest so much from the Chinese market. That, and it's pretty clear they've been struggling to compete with BlackRock during this time as well. So that's probably what's fueling the divestitures in Chinese stocks, and I don't see that it has much to do with NIO stock itself, to be honest, because again, it seems on the surface level at least, it's a terrible time to sell, with the Chinese EV market share still picking up, with NIO stock so far down. I mean, they don't have a lot to lose, and NIO's foothold just seems pretty solidified as well in that heating market. And sure, the EV market in China is getting very competitive, but I think NIO has a pretty solid foothold. And, at first glance, this seems like really bad news that Vanguard has sold a lot of its NIO position. And, BlackRock has also decreased their holdings by about 2% recently. But Morgan Stanley and Goldman Sachs seem to be doubling down on their bullish sides, on their bullish the view of NIO. And, whether this is they want to drive up the price and exit their position, I have no idea. But just given the growth in the Chinese EV space right now, I don't think the news of Vanguard and BlackRock reducing their positions is really as bad as it sounds. So please drop a like, and if you have any thoughts, feel free to comment them below. And as always, thank you for watching, and I will see you next video.